Here's a question we get probably more than any other question we get in real estate from people that are thinking about selling their home. How much money do I get to keep when I sell my house? And there's good reason for that. It's really about that. You buy a house and you live in it for 3, 5, 7, averages 8 years, sometimes 20 or 30. And the whole idea here is to have a roof over your head, place to live and laugh and thrive and enjoy your family. And also, by the way, save equity. So when it comes to selling the home, it's super important to, pretty much everybody. From the moment that you buy that home, the question in your mind is, has my home gone up in value, remained the same, or lost value? And also, how much will I make when I sell it? So it's the number one question we get, and it comes from either people that haven't sold in a while, or maybe you're new to home selling. It's your first time through. So in today's video, I'm going to tell you about that. I'm going to help you understand what makes up seller closing costs in their entirety, and then how to estimate your estimated net proceeds.
Hi, Kevin Yoder, team leader of Yoder Real Estate, bringing to you valuable information about all things real estate and living and working in the Grand Rapids, Michigan area that you cannot find anywhere else. And if you like this video, make sure you like it and subscribe to it so that you can see more content just like this.
Just yesterday, a potential seller called me, and she had heard my ad on the radio, and she said she wanted to talk about selling her house. And the very first question she asked, it wasn't about timing, it wasn't about what to do to get the home ready. She asked me, how much can I make on the sale? And the reason why that was so important is because the profit from home A would then turn into her down payment for home B. And I would say that really fits, 70%, maybe 80% of the folks looking to sell their home, unless they own their home free and clear and they're looking for that down payment for their next place. It's a big piece. So that's why this is so important. And so let's get into the actual nuts and bolts of what's called a seller's net sheet. I'm going to shift gears here and actually show you what that looks like. It's a breakdown of costs associated with selling. At the very top, you'll see the sales price, and I'll walk you through every expense associated with selling and leading you right down the path to that final number, which is the one you're going to want to see, the amount you're walking away with. Okay, let's spend a few minutes and break down a seller's net sheet. So it's called the seller's net sheet, or an estimated seller's net proceeds breakdown. Ooh, that's a big way to describe how much money are you going to walk away with at the closing table. In layman's terms, how much is the check in your hand, the paper check that the agent or the title rep hands you in the state of Michigan when you sell your home at the closing table? We call it a net sheet in this business, and sometimes that confuses sellers. But let me break this down for you. This is probably the one thing that people have the biggest question around is, and for obvious reasons, how much money am I going to get? So this walks you through what that looks like, and then your estimated net proceeds, the check in your hand at the closing table. So you'll notice that I plugged in a fake address here, which is 123 Sellers Road. Don't worry about the fact that it's Louisiana. This is for the costs associated with selling a home in the state of Michigan. They just happen to have a Sellers Road in there. I thought that looked pretty cool. So let's break it down. Of course, the first thing is the sales price. That's the first number we plug in, because you have your sales price at the top of the ledger, and then the costs associated with selling are subtracted from the sales price. And you'll notice that the next component in the list here is commission. Commissions in the state of Michigan, pretty typical for them to range between 5 and 7%. So I landed on 6%. And that number is not fixed by any entity. It could be any variety of numbers. I'm giving you an average. And it varies based on brokerage, it varies based on the agent, and it varies based on the scope of marketing being done for the property. Despite what many people think and believe, each agent has their own marketing arsenal and things that they do to advertise the property. So if an agent can prove that they're spending a lot more money to drive eyeballs to the property to get more showings and more offers, they're going to get the seller more money. So sometimes that marketing budget is increased in order to accomplish all of that. And a seller that's savvy enough and maybe more business-minded would understand that compensation would be more of a return on investment. In other words, that commission is spent by the agent up front to advertise the property, and they're getting a return, and that seller's getting a return because that price is higher. So that number fluctuates. If the agent has a robust marketing plan, they can prove that their listings are selling for more money in a shorter amount of time. You're able to prove that. It's very easy by showing the sales history. Okay, so that's the commission. And typically it's broken into about a 50-50 ratio. So 3%. Sellers will compensate a total of 6%, and it's up to the seller and the listing agent to make a decision on how much of that total 6% is going to be paid to a buyer's agent, which, by the way, in West Michigan, we have over 3,000 agents. So these are 3,000 licensed commission-only salespeople that we are basically enlisting and saying, hey, we have a property here, and will you help us find a buyer? So it's a smart idea. It works for the seller's favor because it's actually enlisting a lot of salespeople out there that could be potential buyers. So that's why the compensation splits that way. So that's commission. Moving right along to property taxes. So you have an annual property tax, and how that number is calculated is based on your date of closing. So for example, if you are closing on the 31st of May and it's 31st of May, well, you're in the home from January 1st to the 31st of May. You have about 5 months of prorated property taxes, and it's broken down per diem, so about 150 days. So that'll be on the ledger as well. You pay off your home mortgage here, which I have an estimated loan balance of $100,000, assuming you have an interest rate of around 4%. What that does is the mortgage company that you are paying your mortgage to will calculate the interest that is accumulated from the last payment you made up until the date of closing. Assuming there's a closing date I plugged in on June 9th. Let me actually do this. Let me compute this and show you the final version of it so I can give you I'll give you the full picture here. So if we go over here and we were to look at this way, there you go. That's probably a better view for you. So you have sales price, closing costs, pay off the mortgage. You have your summer tax debit and the winter tax debit. And so those are called property tax prorations. You have a net proceeds closing here. So you have a homeowner's title policy that's charged by the title insurance company. Every seller that sells a home in the state of Michigan is required to pay for a seller's policy. A buyer actually has their own mortgage policy. It's called a simultaneous policy. That's on their ledger. This is on yours. So these are your closing costs. That term closing costs gets thrown around a lot. I have a lot of sellers say, I don't want to pay any closing costs. I want the buyers to pay closing costs. Well, they have their own and you have your own. What gets confusing is a lot of times the buyer will ask the seller to pay for some of their closing costs. In other words, those could be pushed over onto your ledger and it's all negotiable. So that happens. It doesn't happen the other way though. Buyers don't pay for sellers' closing costs, but sometimes sellers pay for buyers' mortgage closing costs. Okay, so you have your title insurance policy. Closing fee from the title company is about $350. I plugged in at $325. There's state transfer tax and county transfer tax. The way that that's calculated in the state of Michigan is you pay 8.6 for every $1,000 of the sales price. So in this case, when you multiply that out, how many thousands are there here? There's 350. So you multiply 350 times 8.6. And that gets you the total of $2,625 plus the $385. Hopefully that didn't confuse you. That's called state and county transfer tax, unique to Michigan. As far as I know, a broker processing fee, most brokerages charge some processing fee between $395, I've seen up to $795, which covers brokerage basics and or document storage, as well as transaction coordination services, which that brokerage and or agent could have to help facilitate the sale from the time the offer is accepted all the way through to the closing table and make sure that there are no mistakes made. There's your interest charged by your mortgage company, which is calculated from the date of your last payment until the closing date. Commission estimated here at 3% and 3%, and your total fixed costs are there. So your net proceeds, $221,572 on a sales price of $350,000 after you subtract your mortgage balance. And so it's really an agent's job to determine the right list price, which then leads to that sales price, that final sales price, because if you can get that price right up front, and by the way, you can get it wrong. And if your agent is a pro marketer and expert negotiator, like me and my team and, other great agents around the country, and I say that humbly speaking, I've been doing this for 21 years, and it's one of the things that I've honed in on, that skill set and that knowledge base, so that I can help my sellers nail that list price, get it perfectly right on the money, so that ultimately we attract more buyers. And then your sales price, in this case, when you're working with a pro, should be very close to the list price, if not higher. I'll give you what that figure is called. It's called a sales price versus list price ratio, and that percentage should be 100%, very close to it, especially in the market we're in right now, or even over list price. So I did a video in March titled 5 Reasons to Hire a Pro Real Estate Agent for a Quick and Profitable Home Sale. So I'll link that below. In that video, I outlined the 5 things that a pro agent, a top marketer, and a top negotiator can do to help maximize your money. So in the end, when you deduct the cost of selling from the sales price, you get to the bottom number, which is the estimated net proceeds. And I like to do this for my clients in our initial meeting, and then again when we have an accepted offer, which ends up lining up really close to what's called the final closing statement, which shares those final numbers. So estimated net proceeds in the first meeting. When we get an offer, we then do another one, and that should line up really close to that final number so that there are no surprises on closing day. So I say estimated net proceeds because it's an approximation that'll vary based on the sales price, of course. The higher the price, then the higher your net is, and also your actual payoff from your mortgage company. That could vary. So if you're paying for buyer closing costs, that'll adjust that final net figure. So we do the best approximation we can, updating you along the way. So the whole goal here is to get you a number far in advance from the very beginning and then along the way so that you can plan for your home sale accurately and you'll know that number. It's super important. We want to make sure we're delivering the most accurate version we possibly can. Hopefully you found this video to be valuable today. Hopefully that this is the piece of the puzzle maybe that you just didn't know about and then you finally learned something about it here. It is the number one question we get. So I'm assuming that if you're watching this video, you've learned something through this process. If you want to find out more about how to estimate your net proceeds by selling your house, this is what we do best. We're bringing the realness back to real estate. I brought this video up to you today because I hear this question so often. So it's right from the front lines, so to speak. If you like this video and you want to hear more content from the front lines, which means from an agent that's out there every day helping home sellers and buyers navigate through a tricky real estate market and then delivering you that same experience, come back here, hit the subscribe button. Please subscribe to the channel, like this video, and actually, so add a comment below. Was there something that you learned or you still have a question for me? Super important, because what I do is I watch every video and I look at any comments that are below the video and I answer those. So I'll answer every single question that's put below, and then that way you can get some feedback and you're helping other people at the same time. Hope you enjoyed this video and I look forward to seeing you soon.